Boom. All right, what's going on, you guys? It's Royce Jacob. Welcome back to the channel. In this video, we're going to be talking about what big money, like institutions and hedge funds, typically do around election time. All right, so this is important for a couple reasons. The first is obviously that elections are right around the corner, and although there's so much going on in the macroeconomic picture right now, the elections are definitely one of the few events that will have the most significant impact on the financial markets overall. The second is that although retail investors and retail traders have been having a moment over the past few months, institutions, whales, the hedge funds, are still the ones who move the market. That's why they're called market movers. All right, so they don't control the price. They don't have the ability to directly control the price, but a lot of time they're able to control trend direction and create that snowball effect either up or down when it comes to the general equity markets. All right, so that's why I think it's important. This video is going to be pretty darn simple. We're going to look at some charts, and I just want to read through this article by Mr. Jason Bodner of Palm Beach Research Group. So all credit to this guy. I read this article yesterday and I thought it was great, and I couldn't not share it with you guys. So we're just going to read through this once again. Check him out. I'll link the Palm Beach Research Group down below if you guys want to check it out. I really like these guys. They do good work, and a lot of times they go into things like this big money index. He's the only person I've ever seen. I think this is actually his proprietary chart and his proprietary formula for this index, but they go into stuff that I rarely see anywhere else. So again, shout out to Jason Bodner of Palm Beach Research Group. Not an ad at all. I just really like this article and wanted to share it with you guys. All right, so before we get into that, of course, please check out my complete portfolio daily newsletter, first link in the description. If you want to know exactly how I'm trading this current market environment and how I'm personally trading the elections, as well as receive a daily newsletter from myself every trading day during market hours, rationalizing my trades, and just getting my thoughts on the overall market environment as a whole, please give the video a like if you go on to gain value from it, and subscribe to the channel if you're new around here and want to catch more content like this. All right, I appreciate you. Now let's get into this article. For the last time, Jason Bodner of Palm Beach Research Group. I'll link him below as well. If there's one thing on everyone's mind this year that's not the coronavirus, it's the upcoming U.S. presidential election. Election season always marks a time of contention, discord, and general chaos. That's as true in politics as it is in the markets, and we're staring down what will probably be the most contentious election in years. To the casual observer, trying to work out how markets will react to the election may seem impossible, but over the years, I've actually noticed a specific trend that occurs in markets right around the November elections. It's so consistent, trading it has become second nature to me. But about a week ago, I got a fascinating question in my email inbox, and I saw it as an opportunity to prepare you for what's sure to be the most volatile time in the market. Does Jason have any data showing how the stock market performs just before and after the presidential election? Has there historically been a pullback or climb before, during, or after the election? Great question, Marcus. Thank you for writing in. This question prompted me to dig deeper into the data that makes up the big money buy-sell index. I'll need to do a more detailed study, but that's beyond the scope of this issue. Here's what I can tell you today. For the past 7 presidential elections since 1992, I saw a clear pattern. Big money sells ahead of an election and buys right after, every time, no matter who wins. In this issue, I want to look at 3 specific examples: the 1996, 2004, and 2012 presidential elections. Here are the charts. All right, so as I mentioned in the beginning, this guy, Jason Bodner, is the one. I believe this is his specific formula. I don't think anyone else has access to this chart because this is his, whatever algorithm he uses is what formulates this chart, obviously. So this is the big money buy sell index. I have to imagine, once again, I don't know. I don't want to act like I know how he does this, but I have to imagine he takes order flow. He takes into consideration order volume, order size. Obviously, size is a huge thing, and tracks it that way. So whichever way he does it, again, this is kind of his claim to fame, so I trust it. It's done me good personally so far. All right, so as you can see here, 1996, 2004, and 2012. We'll just go down here. I'll keep reading on because he goes on to explain it more, and then I'll chime in if I feel it's necessary. For each of those years, the big money sold stocks prior to the election day, the blue vertical line, and bought them out. So actually, I'll keep one in frame so you guys can have an idea of what he's saying here. For each of those years, the big money sold stocks prior to election day, the blue vertical line. So this line right here is when the actual election took place, and bought them after. We can see this by following my proprietary big money buy sell index, BMI, that line in the yellow. So again, this yellow line is what the big money is doing. This is what the hedge funds, the whales, again, the market movers are doing, is this yellow line right here. The BMI is a system I've refined for over 20 years to tell me what moves the biggest traders on Wall Street make. It's simple. As the yellow line goes down, the big money is selling. As it goes up, the big money is buying. The red and the green thresholds point to overbought conditions, a sell signal, and oversold conditions, a buy signal, respectively. So again, when it's above this green line, that typically means that the market is overbought, and when it's under this red line, it typically means that it's oversold. So this is pretty much RSI. This is just, these lines are relative strength index. That's definitely what he's using here. But again, big money, that's very crucial to know. Again, you want to know what the whales are doing because they dictate general direction a lot of the time. Not all the time, but a lot of the time. You'll see that ahead of each election, the yellow line drops and forms a V of varying intensity. Also note that in each of those instances, the market did pull back prior to the election day, the red circle. And in all instances, the market rose after election day, the green circle. I can point to a similar chart for each election cycle going all the way back to 1992, and we see the same action. Say for 2008, the year of the global financial crisis, the market eventually bottomed in March of 2009 and rocketed higher from there. This makes sense, especially in tight political races. The money wants to take its chips off the table ahead of inherent uncertainty in presidential elections. The selling inevitably drives down prices. Then, once the dust clears and everyone can start to envision what's next for the 4 years might look like, they buy back in, often taking advantage of the lower prices. Now, let's take a look at where we're at in 2020. So as you can see here, obviously these are the March lows right here. That is, I mean, you can't doubt that. But March lows right here, shot right back up. We all know that. We all know that V-shaped recovery that we saw, at least in the stock market, right? And it's no surprise to anyone that we went into oversold territory. You look at RSI on the SPY, on the Dow, we went into especially the Nasdaq, we were at like peak RSI, so which is relative strength index once again. Extremely overbought. The institutions did that as well. And as you can see here, when we just started selling off at the beginning of this month, we did cross below that oversold territory. And you can see when we do this in the past, 2012, I mean, it wasn't too bad in 2004 election. Back here, it actually wasn't bad at all in 1996. But this does look very similar to the 2012 election when we saw this deep V retracement back up. And once we crossed below that oversold territory, the sellers, the bears, you can say, really took over and took us down. And again, you see that it did not recoup until after the elections. But even after the elections, you can see almost every year after the elections, we do make our way back up. So everyone is nervous about the elections. Obviously, it's more of this is kind of what I always say, the buy the hype, sell the news event. It's not necessarily, obviously the election, who becomes president, the left or right, that, especially in this case, Biden or Trump, two very opposing people, that will have a significant impact on the markets, like technically, like factually will have an impact on how the financial markets operate. But I think a lot of the time it is really a buy the hype, sell the news. It's more the uncertainty. The fact that there's so much uncertainty there creates obviously an uncertain environment. Investors, traders hate uncertain environments, which creates fear, which creates selling. So that's a big reason. It's the psychological aspect of a lot of this, which is trading in general. A lot of it's psychology. So keep that in mind, you guys. 2020's chart is obviously incomplete, but it bears a striking resemblance to 2012. And when it comes to this year's election, I'm confident we'll see a similar dynamic play out. Here's the bottom line. If 30 years of history encompassing 7 elections is any guide, I'd expect a softer market ahead of the election, only to strengthen shortly after. I have even stronger conviction that the BMI will fall prior to election day and rise afterwards. It tracks with our theory about big money selling right before elections and buying back in right after, distorting prices in their favor. This paints a compelling picture and reinforces what I've known intuitively for a long time. When the election dip comes, having a shopping list ready for the best outlier stocks, the kind that outperform the market no matter what. All right, so just to close it out, I will give you guys a few things that I'm personally doing right now. So of course, even if we do see volatility, the VIX is an easy play. So whatever ETF you choose to play on the VIX, the volatility index will do well if the markets choose to pull back. Keep in mind, guys, if you've been watching my recent videos, you would know that I do think that it's so dependent on stimulus. So I think the future of the markets, today specifically, the date of recording this, which is September 24th, we did see a bounce. Finally, the carnage is over. The markets closed the day green. So it will be interesting to see how Friday closes out, how next week plays out. And again, the more we go into election, the more volatile times are going to be. And again, when times get volatile, that's what the VIX was built for. So check out the VIX. Gold, silver, Bitcoin. Bitcoin, I'll cover Bitcoin at the end, but gold, silver, just very traditional safe haven assets. So gold and silver, again, as governments around the world are printing trillions of dollars in their own fiat currencies. Their currencies will ultimately become devalued. Even if you can't see it right now, it will become devalued, and you want God's money. In the words of Mr. Rich Dad Robert Kiyosaki, you want God's money. You want something that will retain value, that is scarce and has been provenly scarce and proven itself over thousands of years as a store of value. So gold, silver, I think are still great buys, especially on this dip we just saw. And Bitcoin is by far, in a way, you guys would know this if you watch my videos, I think Bitcoin is the obvious choice in this market right now. Like gold, it has the beauty of the tech sector that's been on fire lately, and it has the scarcity of even more so than gold. Bitcoin is absolutely scarce. There will never be more than 21 million Bitcoin in circulation as long as humans are around, which hopefully is a long time. And as long as computers are around, which as long as we're around, it's like maybe even longer, computers will be around. So Bitcoin will likely be around a lot longer than us, and there will never ever be more than 21 million in circulation. There's currently 18 million now, and that will just, the circulating supply just slows down over time until we hit 21 million, that 21 million cap, which is in like 100 years or something. But gold, again, gold is scarce. Gold takes time, energy, resources to mine. But gold isn't provenly scarce. No one knows how much gold is out there. Again, I'm sure many of you heard the Elon Musk thing about how he's, or the argument, the debate about how you can just, like, there's so much gold in outer space. There's so much gold in asteroids and stuff. And over time, as we go into asteroid mining, I know this is getting a little whacked out. Sorry, I'm going off on this tangent, but I think it's important. As we begin to mine beyond our Earth into our galaxies and whatnot, you guys get the point. But gold is pretty much space metal. Gold is from asteroids, and as we develop the ability to mine space and gold becomes a lot more plentiful, then that makes it obviously far less valuable. But Bitcoin as a digital asset, again, Bitcoin utilizes the efficiency of tech, and we're trending in a world that is trending, especially in this corona economy, especially in this lockdown, trending digital at even more of a rapid pace than we would have without this pandemic. And it has the absolute scarcity, even better than that of gold. Like Bitcoin is so the obvious play. So Bitcoin is my number one play. Stocks surrounding Bitcoin mining stocks like Riot and Mara, love those. I mean, Overstock, crypto exchange with T0. So a lot of plays I'm excited about right now. A lot of plays I'm bullish on. Once again, if you guys do want to know literally my exact portfolio, all call options, all put options, stock positions, cryptos, complete portfolio daily newsletter. And again, although I do think that's important, I think I take a lot more pride in the newsletter that I do send out every trading day during market hours, every morning for me, at least Hawaii time. So again, please check that out if you're interested. It's a good way to support me and get some. I do my best to make it great value for you as well. So again, first link in the description if you're interested in that. If not, no worries. You guys, please drop a comment down below letting me know what you guys think will go down during this election. If you guys think we're going to get some stimulus, if you think the market's going to pop up after that stimulus, I think that will personally happen. I do think I'm optimistic, and optimistic I feel is the right word to use, because I'm still not completely certain. I'm not completely sold on the fact that we will get stimulus, but I am optimistic that we will get stimulus. And in that case, I think every asset that's not the dollar will go up. So gold, silver, Bitcoin, equities, pretty much everything will go up. So that is the bull case for the markets. If we don't get that, I do still have a little bearish side to me of the markets right now. But we'll just have to see, and of course I will keep you guys posted. So once again, please feel free to drop a comment, talk about whatever you want. Always love learning from you guys. Always love talking shop with you guys. And until next time, always remember, take action, make waves. Peace.